Manisha, thank you very much for that. Varun Goel, Senior Fund Manager, Equity at Mirae Asset Investment Managers, is with us. Varun, it's tough competition. I mean, you go to a client and ask him for money, you say, well, it's a hard pitch to beat gold.
Good afternoon, Prashant. No doubt gold has been a phenomenal asset class for Indians, especially because of the benefit of rupee, and has been phenomenal returns in the last 10, 20 years. No doubt about it.
But are you seeing, did you, as an analyst, right, purely as an analyst, what is your sense? It's not exactly your area of specialization, but I mean, I'm sure you got an eye on it, right? Manisha described some of the areas of demand. Central banks are a big area. And of course, I mean, there's always retail demand both in India and China. But what's your sense here?
Prashant, as you rightly mentioned, I'm no expert on gold, so I'm just an admirer of gold prices like you are. But equity, maybe that is based on what has happened in the last few months. Maybe we are looking at a low double-digit kind of earnings growth this year, and hopefully, that should lead to a much better equity outlet sentiment as compared to what we have at this point in time.
Okay, let's just talk about one area which, of course, is leading, which is banks today, Varun. I think we've got deposit cuts from SBI, HDFC, and now ICICI. So I guess that takes some of the, create some buffer at least, because you've got to cut lending rates as well. What is your sense? Is interest going to really come back into the space, and any ideas here?
Yeah, I think broadly what we're seeing is a very significant easing of both liquidity and interest rates by RBI. We've already seen 50 basis points of repo cut already. Our sense is there'll be at least 2 more during the course of this calendar year. So I think calendar year 25 will see almost 100 basis points of repo rate cuts, and already RBI has done significant easing of liquidity. Various non-rate measures, stricter controls that imposed in the last couple of years, they have been kind of taken back. So I think we are looking at a banking system. We should see improvement in credit growth for this year. I think deposit growth, it seems to be finally catching up on the credit side. So I think overall outlook for the banking space, both banks and NBFCs, looks quite positive for calendar year 25, and we expect strong earnings growth to come by in the next 4 quarters.
What about IT? TCS sounded the cautious note. Now all eyes on Wipro today, tomorrow Infosys. What have you made of what TCS said, and what do you expect for the next 3 to 6 months in terms of just pure commentary from IT companies and what that will mean for earnings and valuations?
Well, there's no doubt that the IT space has corrected quite a bit and the valuations have become very reasonable. But I guess it's very difficult to say how the tariff scenarios will play out in the next 3 to 6 months. So it's very difficult to take a call on the overall US GDP growth and the global economic growth. So I think from that point of view, there is some amount of uncertainty will sustain. Some of the larger deals may get pushed back. We might see smaller deal sizes and stuff like that. So I think at this point of time, while the valuations have become fairly reasonable, one may want to take a more cautious stance and revisit the sector once the dust has finally settled on the tariff scenario.
The index itself is, I think, down some 25% for the year so far. And there's commentary will be interesting to see. I mean, TCS, for example, said, okay, FY26 will be better than 25. We'll hear from Wipro today. Infi reports post-market tomorrow. If actual numbers are worse off than what we're expecting, do you think there is downside here? We can revisit the recent lows, or they could be. What is your sense?
Well, I think for FY25, most IT companies, the large cap companies, will deliver a low single-digit kind of US dollar revenue growth. And I think for calendar year, for financial year 26, at this point of time, there are all kinds of scenarios built in from -2 to, let's say, +3, +4 kind of dollar revenue growth. What exactly will be the number? I think it's very, very difficult to take a call on how the tariff situation and the US GDP growth will play out. So I think it's still very early. Let us wait for the next 90 days, what kind of bilateral negotiations the world does with US and what is the impact finally in the US economic growth and the global economic growth. I think if you look at the multiples, I think the IT sector has now gone down to the 10-year average valuation multiples. So there has been a significant re-rating of the IT sector post-COVID, and the valuations were at least 20% premium to the pre-COVID multiples. I think the good thing now is that the multiples have reverted back. The uncertainty on earnings growth, of course, will stay for some more time. And I think this quarter, while we expect most managements to talk about the current environment, but the situation still continues to be fluid. In the next, I think 2 quarters will be very, very important from how the whole year will look out to be, and maybe a little more going forward. So we will, I think, as of now, maintain a slight cautious stance on the IT space.
Okay, Varun, we leave it there. Thank you very much for joining us. Good conversation as always. Appreciate your time here on CNBC TV18.